Well, good morning, everyone. My name is Roger Scott. I'm the head trader for Wealth Press, and today is June 30th. It's the last day of June. I cannot believe that 4th of July holiday is literally around the corner. I mean, where has the year gone? My wife and I were just talking this morning. We're like, it just seems like COVID-19 crash started. February was right here. How do we go from February to June? But time flies, especially if you've got a lot of stuff going on or if you have children and so forth and so forth. So today is Tuesday, and I want to talk about something different today. I want to give you, instead of giving you a market review, I want to kind of go a little deeper and tell you what I'm thinking, kind of get you inside my head today, because I'm seeing something and I'm not liking it. If you're looking at the momentum levels, and this is not new, I've talked about this ad nauseum, but I want to show you something right now. The percentage of stocks in the S&P is below 200-day moving average. The percentage of stocks above the 50-day line, only 65 are trading above the 50-day moving average. And the rubber band is still moving down. And in my opinion, the market is setting itself up for pullbacks right now. So I think we're going to be going south, and I'll show you the predominant reason why. Let's look at the Nasdaq indices. Look at the Nasdaq 100. That's the one that's been really moving higher. And look at the percentage of stocks trading above the 50-day moving average. We went all the way to 99th percentile, all the way from the bottom, and it looks like we're on the way down right now. Momentum is moving down right now. And if you look at the 200-day moving average on the Nasdaq 100, and the Nasdaq 100 has been by far the strongest market. Notice it's starting to curtail and move down as well. Momentum, we're running out of momentum. Now, if you look at the S&P 500, remember, most of the stocks in the Nasdaq 100 are in the S&P 500. So if the Nasdaq 100 is going to take a dump, it'll really push the S&P 500 with it. But when we look at the S&P, let me show you this. I just want to give you an understanding or a baseline for why I think what I think, and then I'll get into the pullbacks. So when we get into the S&P, we already have only 36% of the stocks trading below. See, we're turning lower. To me, this was a big bounce from the huge dump we took in February. We went down, and now we went up, bounced back. Didn't go up all that much if you look at it on a monthly basis. And now we're looking lower. This is the S&P 500. So as you can see, momentum levels look like they're weakening right now. And then if you look at the 50-day line, you could see I drew this right here at the top, just like I did here. And notice we go down all the way before coming up. And we're only at the 60th percentile. If we go down to the 30th percentile or the 5th percentile, it's not going to be good for the S&P 500. Now, as you're looking at this, notice momentum levels is coming down right now. Look at the chart of the S&P 500. Now, I drew this about a week ago. All right, that's a descending triangle. And if this thing breaks down, see that mustard colored line right there? We're already touching the 200-day moving average. If it goes, the market can go south. Now, do I think the market's going to cool off and never come back? No, I think we're just going to be up for another pullback, and then we're going to come back up again. And that's why right now I'm looking for pullbacks and not breakouts. But the way we look for pullbacks, there's two different ways. We look for a pullback to the 20-day EMA, or we look for a pullback to make a 10-day low. So let me go through some of these stocks with you right now. So this is a list of stocks that's making a 90-day high. You know, I love 90-day breakouts. So it's making 90-day highs, and it's pulling back to a 10-day low, and it's coming higher. And we've got 3 stocks to look at. So let's look at Dropbox, all right? What's the ticker symbol there? DBX. I thought it was DPX. DBX, Dropbox. Let's look at this thing. It's making a 90-day high. I think it's actually making a all-time high, and now it's pulling back. I don't like the fact that it went below the 50-day line, but it looks like it's reversing. And I would put a buy stop right here, right above the 22 level, 22.25 level, and I would liquidate it if it drops below the 2050 level. So I like Dropbox right now. I like the pullback on Dropbox. I like the fact that it's pulling back. Look at this. The RSI is really low. Oh, and I wanted to show you another thing, another interesting thing on the momentum levels on the SPY. This is important for you to pay attention to this here. This is the other thing that's causing me to really, really be short-term bearish. Oh, God, I can't use this to save my life. Notice we're going higher here on price action right before we fall. And notice right here, momentum levels are declining, and then we fall. Notice we're moving down. We were moving higher, higher, higher here, and then again, momentum levels fall. So that's what's bought. That's what's see. We were rising here, right there. Oh God, I cannot use this to save my life. See momentum rising, falling right here. So we're seeing the same type of pattern that led us to February, which is why and we have a descending triangle, which is why I believe we're going to cool off. But again, let's look at the pullback stocks because those are the ones you want to look at. The next one is Sony, SNE. And again, these are stocks making 90-day highs and 10-day lows. So let's look at Sony. Sony, we want to wait for it to get to the 50-day moving average. So we would look for a buy stop or a limit order to buy right around the 66 level. And if it breaks the 64 level, we would liquidate it. Now, let's look at my momentum stocks. All right. Now, these are my strongest stocks, and I'll show you my levels, my pullback levels for them. So let's look at them. And I'll just do a few to give you a good example to show you where we stand. I'll go Tesla, Melly, PayPal, Nvidia, JD, and eBay. Okay. I want to give you this analysis. So let's take the chart study. Let's take away the 200-day moving average, and let's put an EMA, exponential moving average, and let's put it on 21 days, okay? That's a very classic pullback level. So we have two pullback levels here. So let's start our analysis. Tesla, let's look at Tesla. I want to give you some good pullback levels for these stocks. Notice we're still above the 21 line. I would wait till we're at the 50-day. So I would wait till Tesla gets into the mid 800 levels. All right. Wait for a pullback. It's overbought right now. All right. And it will pull back. I mean, I can't guarantee it, but the odds are we're going to pull back to the mid 800s. We're just overbought right now. Next stock, Melly. Let's go to Melly. And by the way, for those of you who are watching this for the first time, I picked Melly when it was around here. You can go back to this period and look at our YouTube videos, but I picked Melly when it was around 600. Went higher. We'll look for a pullback. In this case, this rally is really, really hard. I definitely want to see a pullback to the 800 level, to the 50-day moving average. The 20-day is just not enough. It's just too strong. So we want to see Melly pull back to the 800 level. PayPal. Let's look at PayPal. Pullback again to the 50-day line. Look for it to pull back to around the 150-ish level, 147, anywhere between 150 and 145. Nvidia. And I haven't done these before. I'm just doing these for the first time with you. So my surprises are same as yours. Already starting to cool off a little bit, as you could see here. Momentum levels went from going higher to moving sideways. Definitely wait for it to get to the 337, 335 level. As you can see right here, wait for a pullback. Don't buy Nvidia, wait for a pullback. And last one, JD and eBay. Let's do JD and eBay. JD's another one of those stocks that I called when it was like right around the 40 level. Now it's at 60 level. Let's clear all these studies. Actually, no, clear tools. All right, let's go back here. All right, JD. Cleared the tools. Now let's put the study back. Moving average. Here we go. 50-day close. And study. Let's do another one. Let's do 21 days. Actually, let's do the EMA for that one. EMA. This way you could see exactly how I analyze things. Again, we want to wait for a pullback to the 50-day line on JD. And again, we picked the stock like around the 50 level. It's at 60 now. This thing's been just skyrocketing. JD is an e-commerce company. It's like the Chinese, it's like Amazon, Alibaba. It's an e-commerce site. Very, very good stock. Again, looks like it's congesting. Wait for a pullback to the 50, 52 level. All right. Yeah, we bought this thing like right around here, 40. It went up about 50%. Anyway, wait for a pullback to the 52 level. And the next stock is eBay. And I'll stop there. And again, all of these stocks look really, really strong right now, but they need to pull back. And again, I would wait for a pullback. Look at how sharp this rally is. I would wait for a pullback to the 44 level. So again, if you're looking to buy these stocks, these are the strongest stocks right now. Semiconductor and these are the strongest semiconductor, consumer discretionary, and healthcare stocks. This is the Nasdaq 100. So I'm only looking at Tesla, Melli, PayPal, Nvidia, JD, and eBay. These are the strongest stocks, but I personally believe, based on my momentum studies that I showed you and how overbought the market is, and based on the fact that we have FOMC data and jobless claims, and it's a fragmented week, and we have a descending triangle on the S&P 500, I think it's much, much better right now to wait for a pullback instead of buying a breakout. And if you're long one of these stocks or a few of these tech stocks, you may want to lower your exposure right now, all right? Again, I showed you 10-day breakdowns that are coming off of 90-day highs right here. That's Dropbox and Sony. This internet, first DJ internet ETF, I would avoid it. It doesn't look great. But I like Dropbox. I like Sony for pullbacks. I gave you the buy levels there. Just review the video. Then we went to the cumulative strength index, and I started with the strongest stocks. And we went through Tesla, Melli, PayPal, Nvidia, JD, and eBay. And I showed you the pullback price levels that I think the price levels will go down to. They may go a little lower, but I think we're going to go down to those pullback levels based on momentum levels, the descending triangle, the divergence, and the fact that COVID-19 is regaining strength in 3 of the biggest states, Texas, California, and Florida. That's not positive. We've already got restrictions coming again. This is not going to be good for commerce in the short term and midterm. So there's a few things on the horizon which may cause the market to pause and pull back, and I want to make sure you're on the right side of the market. Now, folks, I want you to hear this out. I found a new trade secret that has the potential to pay out $3,852 every week. That's right. I'm about to reveal a market phenomena that nobody has ever heard before. I'm calling it the money magnet effect. Actually, I love the way that sounds. Money magnet effect. Doesn't that sound cool? It actually explains quite a bit. It attracts hot stocks that could even predict down to the penny where the stock is headed. All right? It sucks the stock like a magnet. It's the coolest thing ever. And you could see it make gains of $1,056, $1,913, heck, even $3,852 in a week. Matter of fact, you could see gains like that every week. Folks, this is a phenomena that you don't want to miss. It's brand new. You've never seen anything like it. You've never heard anything like it, and you don't want to miss it. Again, you could make $1,056, $1,913, $3,852 in a week. Who would be crazy not to check this out? Check this out now. Click the link below to get before the Main Street media does. You cannot afford to miss out on this. Talk soon.